Friends, in this podcast, we are going to talk about budget trade, what really has happened. On the day of the budget, the Nifty opened at 11,979, hit a high of 12,017 before falling. As I record this podcast, the Nifty trades at 12,127, which is higher than the high on the budget day. Now, this is something that people would definitely not have predicted on the evening of the budget. Most people would have been negative on the budget. Effectively, every budget has seen this repetitive tango between expectation and disappointment. Before every budget, investors tend to raise their expectations. And just after the budget, disappointment shows up. Now, this disappointment also is not lasting just as the expectation. What we need to understand is both the expectation and disappointment are not really long lasting. So we see these mood swings happen every day. On Saturday, we had a sunk feeling about the markets after the budget was presented. On Sunday, most people were worried about the markets. The mood was somber and fearful. Everybody was wondering how the markets will open on Monday. The more adventurous ones were predicting a sharp cut. But Monday was very different. The markets were very tentative. The skeptics were predicting that this buying was government induced and it won't last beyond midday and stuff like that. But the day remained tentative. The mood improved on Tuesday. People felt better. It was not as bad as they felt over the weekend. And then on Wednesday, the mood again swung into one of FOMO. So everybody was afraid they would miss out. So people were buying their favorite stocks again. It was back to business. What happened to the budget? Everybody had forgotten about the budget. Now, why should investors take an event with such limited public memory so seriously? Yes, it's very important from the macro point of view, but increasingly, it is losing its relevance in all other areas. So, making the budget a primary sentiment driver in the stock market actually doesn't last. Even the minutiae that come on a Monday after the budget, like the PMI, has a bigger impact on sentiment than the budget. So, we are effectively looking for the smallest excuses to change our opinions and once again go back to buying. That seems to be the overarching mode. Another thing about expectation and disappointment is that whenever we raise our expectations very high, our disappointments are equally stark. And whenever we have low expectations, even moderate performance is treated by us as an outlier show. In the case of this budget, because of the corporate tax cut that happened outside the budget, we had raised our expectations too much. And the budget really didn't match our expectations. This budget was probably not the budget where the government could give away much more, because we didn't have revenue growth visibility that gave government that luxury. So the overarching principle which the government applied was give incentives to those who will invest in businesses and create businesses, not those who would invest in businesses for capital gain. And that's essentially what the government probably meant when it says that it should reward wealth creation in the economic survey. So, effectively, as investors, we are seen as secondary drivers of the economy, and the entrepreneurs are seen as the primary drivers. The enterprise is seen as the primary driver. Now, this was not factored into our expectation, and therefore the disappointment was very high. And post-budget, we also saw a new set of people believe that there is a lot of wealth waiting to be created, and a lot of entrepreneurs would jump in to take advantage of that. Importantly, there is a belief in the economy that the crisis thrown by global factors, be it the coronavirus or the slowdown in the West, will eventually benefit us. Now, this is the new expectation that is getting gradually built in, and whether it turns out to be a disappointment or not depends upon how we tone down our expectations. If we moderate our expectations as we build them, then whatever outcome comes will probably look better than what we expected. So, effectively, the budget or what happens after that is all about how we create our expectations and whether those expectations lead to disappointment or they tend to be exceeded. When expectations are exceeded, markets reward us. When expectations lead to too much disappointment, initially the markets punish us. But in the present, what has happened is the expectations have got quickly reset, moderated and redirected. So we need to keep watch about how expectations play out in the next 1 or 2 months and how the outcomes look relative to our expectations. So it's about managing ourselves than managing the information we get from outside. The budget was quite a non-event and the markets seem to have accepted that. Keep watching our site and keep watching our channel. See our videos, please share them, and we'll look forward to hearing your feedback as well. Thank you very much. Happy investing.